Silver has had an explosive move off of a triple top at $35 an ounce back in June of 2025. Now, after we hit $120 an ounce, we fell all the way down into the 70s. Big move, 40%, and it all happened really mostly in one day. This has shocked a lot of people. So what to make of all of this? And we're going to help you through this. We're going to help you figure out what to do next, if anything. The next move in silver will likely be rewarding discipline, not hype, and only those who understand the dynamics of that will profit. Silver remains one of the most volatile and misunderstood markets in the world. Supply, demand, and investor behavior all collides at the same time. And inside of all of that are your own emotions. That's why investing is hard, particularly when we see silver fly up to $120 an ounce like we just saw, and then it corrected 40%. It's easy to get off balance. It's easy to make mistakes. We've seen it happen time and time again. We're here to help you avoid those mistakes, most importantly. As someone who tracks silver markets and many of the commodities as well, almost every day I'm looking at these charts. I've seen these patterns repeat again and again and again. I've seen investors trip up and make the same mistakes over and over again, and those mistakes can make the difference between significant gains and losses. It's easy to lose money in a giant uptrend. If you dive in too big on the big swings up, and if you jump out every time there's a correction, you can lose money on a big upswing. We've seen it happen so many times. Don't let that happen to you. Every decision in the market carries real consequences, and the market is really made to exploit your weaknesses. So don't let those weaknesses turn into losses. If I can help you at all avoid that, I think that I've done my job. Misreading the market or misreading your own emotions, these mistakes can cost you. They can cost you the opportunity to build real wealth. They can cost you your peace of mind. So be careful. Where are you watching from? We'd love to know. There's a comments section down below. Please chime in where you're watching from, where you're at, what you're doing in the silver market today, if anything. So let's talk a little bit about the structural background of the silver market. Really, it's a market like any market, particularly commodities markets, where supply and demand cross over. And how these dynamics play really determines the future price of silver. There's a number of different demand dynamics for silver. I'm going to just dive into them. First dynamic for demand in silver is coming from the industrial/commercial arena. Let's dig into where the demand is coming from. Where is the industrial demand coming from? Take a look at this chart. Almost all of the demand for silver comes from industrial uses like solar, things like that. And the jewelry market is a big demand driver. You can also see that there's some coins, physical investment, bullion, those top three things. Investment, jewelry, industrial fabrication is almost all of the demand for silver. On the other side is the supply. So these are the people buying and using silver. Who's supplying the silver? And what is the supply? Take a look at this chart. This essentially shows you the silver market balance in ounces for 2026. This is an outlook. And when you're seeing negative numbers here, this is a net negative equilibrium in terms of demand. So what this is saying, there's a shortage versus demand. And there has been really since COVID, since 2020. And when there's a shortage, prices tend to get driven up. And so let's talk about the history of silver, because silver has been historically a very volatile asset. Looks at silver going back to the 1970s. This chart goes back to just before 1978. This is silver in US dollars, and this is what I think is the biggest triple top that I've ever seen. Silver made a triple top back when the Hunt brothers tried to corner it back in 1980 at $50 an ounce. It touched $50 an ounce again in 2011, and now it's blown through $50 an ounce and went right to 120. And as we speak, it's right about $80 an ounce, still significantly above that triple top. But when we broke that shorter term triple top at 35 back in June of 2025, we pointed it out on this channel, and now we've broken the triple top that goes back to 1980. This is significant, and everyone in the world is talking about whether this is another 2011 type event. I've got to tell you, there's a lot of froth and a lot of emotion that we've observed in the last couple of months as silver's gone up, and frankly, it got short-term overbought. We've been fielding calls with people that want to get in, that want to get in bigger, and we know that that type of over-enthusiasm leads to some kind of short-term top, and that's exactly what we've seen. But I really think this time is different than the other two times. Investors often will fight the last battle. They say the generals fight the last war. Just because we shot up and came and pulled back sharply doesn't mean this is the 2011 type top. We're at a different point in this story. We're deep into a climactic time. We're deep into a fourth turning, for those of you that know what that means. The fourth turning that we're presently in started in 2008, and it should go through maybe 2030 or so. So another 4 or 5 years. And fourth turnings are climactic times, times of maximum effort and risk. And the whole world seems to be waking up to the fact that central banks are never going to stop intervention. Every single time there's a little hiccup in the market or the economy, they're going to come in and print more money. Central banks around the world have been waking up to that and have been buying gold for a while. It's almost like the world is starting to realize the game is ending. This chart shows the gold silver ratio going back to 2019 or so. The gold silver ratio essentially is the price of gold divided by the price of silver. In other words, how many ounces of silver do you have to equal 1 ounce of gold? You can see on the chart that we've really kind of varied between maybe 70 ounces and as high as 120 ounces for most of this chart until we get to 2025. Early in the year, and when we had Independence Day, silver went to about 105 to 1 in terms of the silver to gold ratio, which was a screaming buy for silver. Now, the real long-term average is more around 40 to 50. So it's really important to understand fundamentals and speculation and how that fits into your strategy. For most people, they shouldn't speculate. Most people should have a long-term position. And we'll talk a little bit about how to build that and how to hold it. But be very, very careful about the whippy action that we're seeing here. There's a lot of things happening right now in this space. One of the most volatile markets that there is right now. So what are some key things to watch in the future about the silver market that could affect you? Really, global supply constraints and mining output factors are pretty persistent and should continue, in my opinion, to favor higher prices for silver, and that we think are going to be pretty persistent. There's not a lot of new mines being opened. And those mines that do exist and are being open, for the most part, silver is a byproduct. Really, silver is relatively cheap. It's getting less cheap, but most mines that are being opened are going after gold, and silver is a byproduct. And so there's no real focus on silver itself. And the ore that's being taken out of the ground is actually degraded in terms of quality. So there's less silver per ton than there has been in the past. And at the same time, industrial demand is increasing rapidly. Think solar, think electric vehicles. So I don't really see the supply getting better anytime soon, but the demand is going to keep increasing over and over in the coming years. And now we have speculative investor demand. So I think that this move higher in silver really woke people up. So people that have not before now thought about silver are wondering, do we have silver in the house? Can I find silver in the thrift store? They're looking at their coins and seeing if they were made before 1965. For those that don't know, any coins before 1965 have silver in them. It's going to get harder and harder to find those in circulation. They have 90% silver. How should you think about all of this? What should you do going forward? It's a big question. How do you get started? Well, here's the thing. If you don't have any, you should start to build a position, in my opinion, in silver and gold. We've long been recommending 5 to 10% of your investable assets. We can help you decide what that mix should look like with silver versus gold, but if you're starting with smaller amounts of money, let's say you're starting with something less than $20,000, I'd almost certainly focus on silver here first. And so pick an allocation. I'd probably start relatively slow. So if you wanted to buy 10%, I think I'd buy 3% right now. And then I would give it a week or two and see what happens. And then if we are holding in here and holding above that trend line, add another 2%, get yourself up to 5%. And then give it a month or two and see where we're at. If we go right back to highs, you can always add some more. In that case, if we went back to new highs, I'd probably add another 2 or 3% there, get yourself up to 8%. And I might stop there. So the bottom line is a dollar cost averaging strategy in, or getting it. If you already have some, take a look at your allocation. For the people that we've been telling to buy 10% gold and silver all these years, some of them are at 30% or even 40%. If that's you, you might be starting to get overweighted. And the only real thing to do there, in my opinion, is to sell into strength. And you're going to have to assess how you feel about it. Talk with us about what you think your own allocation is. We have to really assess what not only your allocation is, what your financial ability to handle the volatility is, and most importantly, what your psychological ability to handle that stress is. I do believe selling some on the way up makes sense, even if you feel like there's nothing to do with it. A lot of people don't want to sell because they're like, what am I going to do with the cash? A home improvement, a land purchase, a big vacation, that kind of thing. What type of silver should you buy? It really doesn't matter. I'd buy bullion coins. The Canadian maple leafs are readily available lately. Don't be afraid of buying generic bullion. You can buy them in like buffaloes forms. There's a lot of generic buffalo out there, or any generic coin that's a 1 ounce coin would be fine. Even the bars are fine. The 1 ounce bars, the 10 ounce bars, and even the 100 ounce bars are all good. What you should look at is a relatively small premium above spot. And what about storage? Silver is large. And so people that have large silver allocations and they're out there, silver can take up a lot of room, a lot bigger than you can put in a safe. It can take up a good portion of a room if you have a lot of it versus gold. So that's the big negative for silver. If you're going to have a large silver allocation, you should think about storage. We can help you figure that out. There's a number of different options. Most of them cost around 0.5 to 0.7% or so per year for storage. My advice though, just buy some silver. You can buy a monster box of silver. It's about the size of a big shoebox and it weighs about 32 pounds. You could buy one or two of those if you wanted to and store them in a safe or somewhere in your house. And if you get more than that, and that's about $100,000 worth at last week's prices, two monster boxes, it gets kind of big to have in your house. And so if you're looking to invest much larger dollars, you should probably think about storage, or you should think about paper. There's securitized silver out there that's really good, and it represents silver that's actually in storage. It is not as good as your own storage. It's not as good as being in your own hands, but you could think about doing that too. A number of our clients have allocations there. I'll refrain from mentioning actual products, but be happy to speak with you directly about that. But there's some big names out there that have stored silver directly in high quality securitized vaults. Let's talk about investor behavior. This is really the biggest, most important thing, and it's a big part of my job. We are wired to chase things that are working and to run from things that are not working. Most of what will make you successful or not successful will come down to the mistakes that you make, the chances you take, and the mistakes that you make. Taking chances isn't inherently bad. Not having a plan is inherently bad. And it's so hard to overcome sometimes, and happy to try to help or coach our clients. That's what we do on a daily basis. It's hard enough just to hold on to your position and not being shaken out, particularly with a big 40% drop. It's easy to get shaken out. But be careful about chasing. If you have your allocation, stay with your allocation. Particularly if you've reviewed it with us or with somebody else that's impartial and you've got an allocation that you've sat with for a long time, don't tinker with it much, if anything. And it's getting big. And when I mean big, I mean more than 20% or so of your assets. Start to think about selling a little bit and using that money elsewhere on the way up. If you don't have a position, do what I talked about earlier. Start with 3%. Add another 2% after a couple weeks or so, particularly if we show more strength after that. But don't jump in. We've talked to people that felt like they had to get in. They're talking about, well, the debasement trade is here. I've been waiting all my life for this. I need to go all in. Most people can't handle that type of shake, that type of drop, 40%, nor do they even have to subject themselves to that. Now, here I am saying maybe 10%, maybe 20% if you're really aggressive you can go to. Why be 100%? Why go all in? We did another video about going all in. It's on our channel. We talked about how you can be right going all in and still have a miserable time and make all the mistakes on the way up, even if it works out. And I think that's happened in the silver market too. I think there's some people, and I've seen it. I've seen it with people we talk to. I've seen it with our own clients. They go in too heavy and they get taken out on the first shakedown. They have to get out because the dollar swings are just too high. So just don't go all in volatile markets. Get your position where you want it to be. If you took a 10% position and it doubled from here, you would then be at 20%. Then you've got to make the decision what to do. Do you want to trim that back down or let it ride? I can tell you the typical urge is going to be to add to it. And that's probably something you shouldn't do because eventually you'll get shaken out on some big sudden move. So don't chase hype. I've seen it over and over and over again. People with great ideas, they get shaken out because it's just too big. Get yourself to a level that you can sit with it psychologically. And I got to be honest with you, it takes a lifetime sometimes to learn that. I've made some mistakes myself where I've gone all in on a theme personally that I thought was absolutely right. And it wasn't worth it. Absolutely wasn't worth it. I was convinced many years ago after QE started that valuations were insane and that the market couldn't keep going. And so therefore I bet against the S&P 500. And yet the S&P 500 went up 50% after quantitative easing started. And this was all post Great Financial Crisis. And then when nothing made sense, it went went up some more. And, ultimately it doubled, tripled, and beyond. I'm out of that trade long ago, but I remember very well the lesson, the painful lesson that it's like to be so sure about something when nothing made sense and yet it didn't matter. The fundamentals for the silver market are there. I believe the fundamentals are going to provide a tailwind for some time. We hope that you can have a good ride and you can have success and ultimately master your own emotions, because that's what this is all about. The market is an infinite environment that will poke and prod at every single weakness that you have until it finds out what yours is. And we're here to help you through that, so you don't make those mistakes. Or if you do make those mistakes, that those mistakes are relatively small and you learn a lesson from them that you can use for the rest of your life, that you can create income for yourself, because ultimately that's what this is all about. Not the biggest pile of money you can possibly get, but income, and useful income that you can use for yourself, your family, for your own enjoyment, because life doesn't go on forever and nothing is certain. Silver, though, certainly seems to be doing the right thing, and I think it will continue to be doing the right thing, and we're here to help you figure out how to best invest in it. So good luck. I hope some of these examples today have helped you. If you want a deeper dive into precious metals and the trends that are shaping this market, check out John's latest video. He just did a video, Precious Metals and the Big Cycle. Down in the description, you can find a link to that video. Do you want to talk about how these things can impact you, your portfolio? Maybe you want to talk through some tactics or talk through some parts of the psychology of getting your position started and staying with your position. Book a free 15-minute consultation with us. No obligations. We're just here to help. We want to help you see some insights that can be tailored to your goals, that can help you succeed. Click the link in the description and secure your spot now. We look forward to speaking with you. By the way, we're so close to 10,000 subscribers. We need your help. Could you please subscribe to the channel? I hope you enjoy these videos. We love doing them. We feel honored to be on this platform. Every week, we're going to break down the market into decisions that can help you tactically. We're going to help you think about things the right way to survive this investment game, which is very, very difficult and in so many ways is rigged against you as a human being. We're here to help you one step at a time. So thank you for watching. I'm Mike Preston at New Harbor Financial. I feel honored that you're here, and we hope to see you again soon.